Hello and welcome to another MCO update on FET. It seems like some kind of a pullback is unfolding on the FET chart right now, and that could be the B wave pullback, or actually maybe still an internal pullback within the A wave to the upside. So we're going to take a look at the relevant support levels on the smaller time frame. Unfortunately, it's not yet a 5-wave move up. We only have a 3-wave move up. So, I mean, that's okay for an A wave, but obviously the A wave can be 5 waves as per Elliott wave guidelines. And with a 5-wave A wave, the structure would just be more clearly bullish. So with 3 waves, it's a bit of a, yeah, it's not very clear, you know, that's the thing. But we can still define very clear levels for that B wave correction, which we are doing and we have done. So these are communicated on the smaller time frame. Quick reminder that if the April low holds, there's still a case to be made for a 5th wave to unfold here. And that 5th wave, it could take us to around about 100% extension at around $6.22. But there's a lot of work required to make that happen, obviously. And the downside momentum is still high from that last high that formed on, what was it, Friday, huh? No, Sunday, Monday the 28th. Monday the 28th. No, it's not, doesn't matter, Sunday. Okay, let's take a look at the shorter time frame. And so far, the move down is a 3-wave move, so it's a corrective pullback. Yeah, so that does keep the door open for higher, even if the pullback is deep, as long as we don't break below relevant support levels. We can watch for higher prices. And there are a couple of scenarios I'm tracking. There is the white scenario, which is the, let's call it directly bullish one, in which we are working on a 4th wave. And as long as the market holds above the 59.8 cent level, one more high could send us higher in a 5-wave pattern of wave A. So you might already know that scenario. We talked about that in yesterday's video. And the 59.8 cent level is the 50% retracement of the last rally of the 3rd wave, what I've labeled as wave 3 in white. And this is a key level because as long as the market holds the 50% fib level, this can be a 4th wave pullback. It does not yet look finished, I have to say. I mean, it does look full. That doesn't mean it needs to turn around. It just, this sharp decline that we've now seen here doesn't really, and also we haven't broken above any high. So what I'd like to see is a break above 67.9 cents, the last swing high from Monday, to indicate that maybe a low has formed. Until we break above a swing high, there's nothing that would indicate a low has formed. There's also still a little bit of space. I mean, we're now testing the 38.2 retracement. It does have room all the way down to 59.8 cents if needed in this 4th wave. Now, in the yellow scenario, this might be an A wave down, B wave up, C wave down. So even at least a B wave bounce seems probable from this region. So it will depend on the structure of the next rally. If it's corrective, it's likely the yellow count, but even then it could still be bullish as long as we're holding the lower support area. But for now, I'm leaning towards white as long as we are holding above 59.8 cents. But I need to see some kind of a reaction here. So this is an area to watch, absolutely key spot. And we have some structural support here from these previous swing lows in the area around 60 cents, which is very close to that 50% retracement. Now, if we get another high, it might target the area around 82.6 to 91.8 cents in the 5th wave to the upside. So I'll keep you updated about that. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.